All right. What is up, traders? What's up, tycoons? Let's talk about natural gas. What the heck is happening, right? All right, we're going to give you guys an update on the weekly time frame for the Henry Hub natural gas futures. It's been following the analysis pretty well. It already did what we wanted it to do, but now we're going to see, if there is any more gas in the tank. Okay. We'll also take a look at the MCX futures here, go over a monthly supply and demand zone chart so you guys can get a really just a great grasp of everything that's going on, right? Taking a look at the much larger macro levels, macro important zones. All right, and then we'll zoom in here on the 4-hour chart and go over our possible 5-wave structure to the upside, taking us to the next overhead supply zone. And what really needs to happen for that to essentially happen, right? Then we'll take a look at Boyle, of course. Boyle's been trading in a range for pretty much the whole year since April, and we just broke and made new lows in Boyle. So the big question is, what's next, right? Is this rally over? We have UNG here as well. UNG bounced off of support right here, right around 606, as mentioned in the last video, and we came and gapped down today. But UNG did not make new lows versus Boyle, which, as you guys can see, did make new lows. So we're going to give a nice breakdown analysis, a thorough review of natural gas in today's video. So be sure to smash the like button, subscribe to the channel if you're new. But as always, the content provided on the channel is for informational and educational purposes only and not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. Right. I started a completely free newsletter for you. If you're new to the channel and you don't know, I give out free valuable finance content, even try to sprinkle in 1 or 2 free trade ideas every single week in my newsletter. Right. And these are what the trade ideas will look like. Right. We'll highlight the conditions that we're looking at. We'll show you guys the chart, describe everything we're looking at on the chart. And then you can go ahead and take a look from there and see if it's something that you guys would be interested in, right? We talked about the home builders over 2 months ago and the bearish, setup that those stocks had. And if you take a look, the XHB, the home builders ETF, ended up dropping down over 18%. So that was a very nice trade. This was another one on SWK, Stanley Black & Decker, highlighting the rising wedge, going over where we think price could come down to. And you can see that played out very nicely there as well. So if you're fans of free valuable content and you want free trade ideas emailed straight to your inbox every single week, go ahead and sign up for that newsletter using the link in the description below. All right, there's also the investment intelligence Discord, where you guys can basically get access to all of the different stocks and different plays that I'm looking at. And see what it is that I'm looking at, basically to get these nice returns trading options. We just had a natural gas long play here recently, and that play we ended up closing it after 2 or 3 days, and that play worked out very nicely, right? So join the Discord. If you don't want to join the Discord, you guys can sign up for the free newsletter and still get that free valuable content. Now let's head into today's video and break down the charts and the analysis. As we mentioned, we're going to start off here with the natural gas weekly chart, okay, the Henry Hub futures. And so, initially we're looking for a breakout of this triangle pattern here to take us back up to this $3.50 to $4 region. Now, the reason that we're targeting that is, very simple concept, right? Especially, when it comes to simple concepts of trading, you have old support, right? Old demand, old support becomes new resistance, right? And if you take a look here, we never really tested it as resistance. We just completely blew through those levels of old support. And so if we were to get a reversal, it made a lot of sense for us to come back to this $3.50 to $4 region, as an area to retest it as supply now, as resistance, right? And you can see we did that and have already started to pull back. We're basically holding this 2.988 level pretty well. All right, we are just below it, but we're basically right there at that 2.988. Let's just call it $3. Okay, $3 is a very, very critical and important level psychologically, right? It's a very key level. There was lots of traders and lots of momentum stepped into natural gas once it cracked that $3 threshold. And I've mentioned before, all of those people who are interested in nat gas when it cracked that $3 level, they're gonna hop right out of the natural gas trade as soon as it gets back down below $3. So we are below that $3 level. It's just by a couple cents right now. So the bulls really need to step in and keep it above that $3 price level if we want to have any chance of coming back up and testing that $3.50 to $4 range yet again, one time or once again. Now, what I would really be cautious of and pay attention to a lot is going to be this MACD right here. So you can see when we had the bullish crossover here, it basically just went straight bullish from there, right? We started putting in lows, higher lows, higher lows, and higher lows, and making highs and higher highs and higher highs. As soon as we got that bullish MACD crossover right here with the white line crossing above the red line, if this white line crosses below this red line, this is what you want to pay attention to over the coming weeks. All right, is going to be this MACD on the weekly chart. If it crosses down below, it could spell trouble and lots of trouble for natural gas, along with the fact that most likely we would be below that $3 psychological level. And if you get that bearish MACD crossover and we're below $3, again, that could spell a lot of trouble for natural gas. Now, when we look at the overall monthly supply zones, we've been testing the same overhead supply here, essentially for the entire year, right? This is 2023 right here. And you can see that as we came in, we tested it in the first month, second month, right? Fourth month, fifth month, sixth month, seventh month, eighth month, right? All of this time we were testing this zone, testing this overhead supply and not able to break through until we finally broke through. And we mentioned that, you don't want to enter trades in here in these black areas, right? What these are no man's land. Okay. You want to enter where you have some type of a hedge, or I'm sorry, some type of an edge, right? Where you know that there's an imbalance of supply and demand, and your odds of success in a trade are going to be much greater entering in those key zones versus, if you went long here in no man's land and you see us pulling back, now you're panicking, now you're freaking out. But we're getting exactly what we want, which is a breakout and a retest of this zone, retest of this level, and ultimately a push higher. Now, whether or not that happens, we'll have to see. Okay. But from a textbook, just trading standpoint, right? I mean, you don't typically want to buy the breakout. You want to buy the retest and then see if we hold, right? Because then you can set yourself up with a much better risk to reward ratio and define your risk at a much better level. So, even though nat gas has been bearish this last month, ultimately it is, doing a clean retest right now, and we'll see if we can find support and push back up higher out of this zone. If we were to take a look at it on a 4-hour time frame, you can see we started here in that demand zone, pushed up for wave one, got a wave two pullback. Wave three is typically your most impulsive. We had a very strong wave three up, and we're pulling back to these wave four target areas. And we need to be cautious of this gap down right here. Now we're very close to putting in a double bottom on this 4-hour time frame, and we have a little bit of some bullish divergence forming here at the moment. Okay, on our RSI. But one of the main signals, again, has been using this MACD. Now, typically, whenever we're overbought, okay, so overbought here on the RSI, and then it's followed by a MACD crossover. That's typically when you see a pretty sharp move to the downside, right? And we saw the same thing last time when we were overbought here, and then MACD crossover to the downside, significant pullback. What's really interesting is it also works back to the upside, right? So look how we're oversold here, and then we get a crossover to the upside, and we start a bullish cycle. Over here across to the upside, get a bullish cycle. So, if we come back down into this oversold territory for 3 times, basically within a 1 month or a little bit over a 1 month time span, that's really a signal that like natural gas is getting oversold on a 4-hour time frame. And if we can end up getting a MACD crossover on the 4-hour chart, that would be a nice bullish look and be something that you would be wanting to look out for as a potential buy signal, right? Now, this is Boyle. As we mentioned, it's pretty much been trading in this range. We bounced off of demand here in September and October. We bounced and established this initial demand here in the summer. And we were looking to see if we were going to retest it. We entered into some long positions on Boyle once we came at the top of this zone here. And then, very quickly, right, it snapped up. It pulled back again, and then it actually made new highs. So I think within like 3 days, we were out of that trade. We took the profits. A lot of the smaller time frames, such as the 1 hour and things like that, didn't look very promising. So it was a good idea to take those quick profits. And as you can see, we dropped down, and we're actually closing at the bottom of this prior demand zone. Now, there's 2 ways you can look at this, right? We're breaking down and retesting the level to continue going lower, right? That's scenario 1. Or oftentimes you see these liquidity grabs, right? And so what's a liquidity grab? Well, let's say that, the people who bought in here Okay, it comes back down to this price level, but there's not enough liquidity right here. Okay, there's not enough sellers at this moment. And so what do? Well, they know that most likely people have stop losses below here or right around this zone and in this area at the bottom of this zone. So what they do is they come in here and they push price lower, stop everybody out, and those sell orders now provide the liquidity for the potential rebound back up higher, right? So this could be a liquidity grab that we're seeing here, to ultimately get a nice little rebound. That's scenario number two, right? And so we don't have crystal balls. We can't predict what the market is going to do, but we can try to set ourselves up for the different scenarios so that way we can prepare for them, right? If we were to draw some trend lines right here, we've actually got a chart pattern known as an inverse bump and run. All right, and I'm going to show you what that chart pattern is right now. But essentially what it is you take a look and you use this pattern, you make this pattern by drawing two trend lines, right? And so this initial downtrend line here, this is our prevailing downtrend, right? So we're in a prevailing downtrend lower, and then we get this aggressive bump down in the price. Now, if we were to break this trend line here, this would be the run, right? So we have the bump and then the run. Typically, you'll see a very quick move upwards in price. And that also correlates to potentially filling the two gaps up that we have right here on Boyle. And in a perfect world scenario, you would actually break the second trend line and head up towards where the pattern began, which is going to put us back into that overhead supply zone that we've been battling right around $80, basically $76 to $80 would be that ultimate perfect world scenario for this inverse bump and run. Now, the key thing with chart patterns is to wait for confirmation. So just because we have one forming here, we haven't even broken through this trend line yet. So if we do break through this trend line, okay, you can look to see if we're going to basically maintain this trend line. But if we simply just break this trend line and come back down and move sideways, that's not the inverse bump and run. Okay, what you look for again is that strong impulsive move to the upside up towards the second trend line, and that would give you more confirmation that we are in the phases of getting an inverse bump and run breakout and push higher. We'll take a look at UNG real quick. This is going to be our last one. All right, 606 was that key support level. We've gone over all of the different levels in the previous videos, if we can maintain above 606 for UNG, we have 642, 667, 715, 731, 777, 821, 852, right? So those are all the key levels that I'm really watching when it comes to UNG. We pretty much broke down a lot of charts in today's video. You want to be looking at things like the futures and such, to really establish yourself and have a good idea on where things like UNG and Boyle can go if these are the trading instruments that you're choosing. Remember that there's lots of forms of decay associated with things like UNG and Boyle, so you do want to be mindful of those. I've got a really good video. You can look up ZachlyTrades myths about decay, UNG, Boyle. You can basically just type that into YouTube and it'll pop right up, going into great detail explaining all of the different types of decay factors that come with these futures-based commodity ETFs. All right, and those are things that you want to be aware of. Yes, they will affect you to the downside, but that doesn't mean that there aren't conditions where you can make money and still be profitable trading these types of things. But you want to know the risks ahead of time before getting into them, so that way you can understand and have a better idea on what your true game plan is going into these things. All right, so that'll pretty much wrap up today's video. Hopefully you guys enjoyed it. If you did, smash that like button, subscribe to the channel, sign up for the newsletter using the link in the description. And if you want to, sign up for the Discord directly. There's a link in the description for that as well. And I'll see you guys in the next one.